Good morning, everybody. We've got a mixed trade in the grain markets here early on Thursday morning. It is 6:30 a.m. Central Time. March corn futures up a quarter cent at 5.86. March soybeans up 6 at 12.71 and a quarter. March Chicago wheat is down 3.5 cents at 7.52 and a half. March Kansas City wheat down 2 and a quarter at 7.83 and a quarter. March spring wheat up 1 and a quarter at 10.10 and a half. If you guys are listening on the podcast, appreciate it. Leave me a rating or review. If you're watching on YouTube, hit that subscribe button. My goal is to get to 5,000 subscribers. We're at about 3,300, so help me out there if you enjoy this content. If you need some additional assistance from me, go to my website. It is www.standardgrain.com. Go to that website, click on Grain Marketing Plan in the upper right-hand corner. Check out my subscription service, guys. All of my grain marketing recommendations, everything from cash sales, capture and carry, option strategies, my subscriber-only videos, all of this stuff for $49.99 a month. This is billed to your credit card automatically. You can cancel at any time. There is no other fee. There is no obligation. I will not try to sell you anything else. Certainly give that deal a shot. We had some really severe weather move across a lot of the United States yesterday. All sorts of crazy things. Severe winds, hail, a total of 19 tornadoes reported throughout sections of Kansas, Nebraska, Missouri, Iowa, Minnesota, and Wisconsin. Power outages in Wisconsin near 200,000. Outages in Iowa more than 100,000. The first ever December tornado warning was issued in Minnesota. Yesterday set a new record for high temperatures in a lot of areas and a new record for the highest number of hurricane force wind gusts in a single day. A total of 55 such wind gusts reported according to the National Weather Service. So this was a nasty deal. If you guys saw any of this extreme weather in your neighborhood, if you saw any damage, anything like that, leave me a comment in the YouTube video here. Whatever happened in your neighborhood, if you were in any of these sections on my map here, in Kansas through eastern Nebraska, almost all of Iowa saw some sort of severe weather. Let me know what happened in your neighborhood. I'll be interested to see. Now, in regard to the markets, does this matter at all? Probably not based on yesterday's price action. If there was to be one market that would be impacted, you would think maybe winter wheat, which is one of the few crops that's actually in the ground right now. But the market does not seem overly concerned. Winter wheat actually got beat up really bad yesterday. We had a crush report from NOPA yesterday. The number came in below expectations, 179.46 million bushels of beans crushed in November. The trade was looking for a number near 181.6. Now this number, this 179.4, this is not a bad number. This is the second best number seasonally on record. It is the seventh best monthly print for any month on record, just a little bit below trade expectations. So this is not a bad number at all. Still good to me. Domestic soybean crushers still looking at pretty good margins here. And remember, guys, this is important, of course, because the domestic processor essentially accounts for half of all the demand for soybeans grown in the United States. So this is a big deal. But it's below expectations again, but still not a bad number at all. Ethanol production declined marginally last week, 1.087 million barrels per day. That was down 0.3 of a percentage point on the week, still up 14% versus the same week last year and up 2% versus the same week in 2019. So ethanol production still very strong here. Ethanol stocks grew a little bit. They were up 2% on the week, but ethanol stocks are still at their lowest level seasonally of the last 5 years. So maybe we're starting to get into a situation where ethanol stocks build here. Maybe a little bit premature to say that, but the stocks number certainly was just a little bit higher yesterday. A little bit of news regarding wheat. The first one is this. Some chatter suggesting that Australian wheat quality is not as poor as some people had expected. Now, you remember a couple weeks ago, we discussed all those heavy rains, late season rains that they had in Russia, and the idea that quality would be downgraded from milling quality to feed grade quality in a lot of the Australian wheat crop. And now some of the newer reports suggesting that maybe the damage or loss in quality is not quite as severe as what the trade had expected, and that the crop may actually be a little bit better than expected in regard to quality. In regard to quantity, they're going to have a record crop in Australia, but the quality is kind of the issue here. Another story regarding wheat, Russia may reduce its wheat export quota. There were several sources that told Reuters yesterday that the number may be reduced from their previously planned 9 million metric tons down to 8 million, and this is the time frame from February 15th through June 30th. So essentially eventually they're going to limit wheat exports to perhaps 8 million metric tons. That's a level that's still seen as being generally non-restrictive. It's not bullish. There were some people, during the last couple of months who thought that the quota might be much, much lower and actually would be restrictive. So I don't read that as being a bullish factor at all. In fact, it's probably a little bit bearish, if anything. A lot of news from the Fed yesterday, and this was probably the biggest headline across the financial space. The Fed will double its pace of tapering and plans to raise interest rates 3 times in 2022. So in regard to tapering and what the Fed does, of course, as I've discussed at length, they have been buying they started or were buying $120 billion in a combination of U.S. Treasuries and mortgage-backed securities each month. They started to scale back in November to the tune of $15 billion per month, and they're going to double that pace. They're going to reduce by $30 billion per month now. And the faster tapering pace will allow the Fed to raise rates earlier than expected. The money markets are now pricing in like a 42% chance that the first rate hike comes as early as March. And then you're going to see, if this is all goes according to plan, you're going to see 3 rate hikes next year. This was kind of a buy the rumor, sell the fact situation in regard to the markets. Stocks sold off prior to the Fed release and then rallied sharply. The S&P gained 1.6% yesterday. The Dow was up 383 points. That's just over 1 percentage point. If you look at the dot plot here, what's expected, the general expectation among Fed members is that your Fed fund rate gets back to about 0.75 of a percentage point in 2022. You get up to somewhere around 1.5, maybe better than that in 2023, and then maybe up over 2% by 2024. So that's what's expected now. But of course, any sort of shift in economic conditions could shift those targets. That's just what's being projected right now, essentially. Not a great day in the cattle market yesterday. Steep losses in the fat cattle, steep losses in the feeder cattle. Really not much to speak of in terms of cash cattle trade yet this week. We'll see what develops here today and tomorrow. In the outside markets, we've got the U.S. dollar lower. The stock market is up again after a strong close yesterday. The S&P's up 34. The Dow's up 230. Bonds off a little bit. Gold's up $20. Silver up sharply as well. Crude oil is up 37 cents in the February WTI at 71.03. Everybody have a great day today. I will talk to you guys on Friday.